Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. Our morning leap is our pre-market trade plan setup, where we take a look at the market from a macro to micro view, from the structure of the market. Then we drill down to the levels that we're looking to trade at and what our targets are from those levels and what our main hypotheses are. My name is Doug McKay. I'm the founder of Quantum Leap. We just had our 8th year coming up just passed in September. Please read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own metrics. If you do want to find more information about our trade room, please send me an email at quantumleapfutures@gmail.com. I don't have a website. This isn't a commercial venture. This is a group of retail traders that come together live each day. We do these morning sessions, and then we do live trading and analysis throughout the day. If you want to contact me, feel free to call me on my cell, 647-545-8065, or send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. If you want to see more videos like this, there's over 270 days of pre-market trade plan setup on YouTube. Do a search Quantum Leap Futures. You can see what our accuracy is and what our history is. And then, of course, if you like what we do, follow me on Twitter at Crazy2. Okay, so we're going to get started right away. Let's do the news first because there's not a lot of news. I forgot my news. I already had it open. We had Canadian housing at 815. No real surprise. Expected 200K, came out at 198. We do have labor market conditions index month over month coming out at 10, and then that's it for the day. Very little news today. Friday we were looking for a rotational day. I was actually, if we held the 89 and 75, was looking for a rotational day with an upside bias. We had this big sell-off, okay, that took us right through some of our key levels. We got down to that 87. We tested the 84 and the value area low. So really, within the first hour, we ran, fell out of value and ran all the way down to that 78.50 area, which was our main target. That's the CHVN, where we had the composite VPOC shift from on Friday up to the 84 and a quarter. I'm going to talk a little bit about that because that's a significant detail that happened on Friday. Rotated back up into range, and then we basically just chopped around the rest of the day and had a late Friday afternoon rally back up towards the close from Friday's settlement. So let's start. I always like to start my day with a basic candlestick chart. I use a 9 EMA and a 20 SMA. The purpose of this is to give me an idea where we are within the trend, within the different time frames, and then where we violated the trend or challenging the trend. You can see we've had this beautiful trend going, great slope, great separation, and then we, August and September, we broke below the 9 and the 20, challenged the trend. October, we took it right back up. And so far in November, we're trading above the 9 and the 20. We're starting to get slope. We don't have a lot of separation, but the trend itself is still intact on the monthly. On the weekly, we had that downward trend starting, and then in October, we took it back and broke back above the 9 and the 20. We do have a naked cross at 2030. Naked crosses is a study that I've done and started it about 5 years ago. When the 9 EMA moves, crosses the 20 SMA, and price action moves away, these price levels will very rarely be left alone. The market will come, and it has very high probability. I follow it on the 5, the 15, and 30 minute for intraday trading and targets, and then on the larger time frames for bigger rotations and longer term targets. So there's no doubt that we're going to come back down to this 2030 area, but we do have a trend starting on the weekly. We do have a technical gap that we've created on the weekly that we have not closed yet. But the trend itself to the downside has been violated, and we have a possibility of starting an upward trend on the weekly and continuation on the monthly. On the daily, a little bit different story. We had that downtrend, consolidation, broke back above the 9 and the 20. Now we've got slope and separation. We've had a beautiful trend for the last couple of weeks. We have another naked cross down here, down in around the 1938. Again, it's on the daily. Keep the time frame in context. We created this technical gap here, and they've come back and they've tested closed the tech gap, tested the 9 EMA. 2084.25 is where we start to violate. This is an important level because this right now is where the composite VPOC, the most traded price going all the way back to the beginning of January 1st of 2013, that is the most traded price right now at 84.25, and it was there, and then it shifted down to the 78.50, and now it shifted on Friday. It shifted back up. So now when that happened, I said that's not good for the shorts. Value has come back higher, and we bounced off that level and closed higher. And so far, we've been holding that level. Right now, we're trading 88.25. But the trend itself on the daily is still intact, but is starting to weaken. We're losing a little bit of slope here, but we do have separation. If we do break the 84.25, you can see that the test down to the 20 SMA is going to bring us down into the 57.51. I'm actually watching the 2066, and I'll show you why in just a couple minutes. Going into the intraday, see where we are coming into the RTH session today. Intraday, we've got a little bit of a downward trend, but it's more consolidation, but we are trading below the 9 and the 20 right now. Test to the 9 will bring us up into the 91.75, and the 20 will bring us up into that 94 area. I'll talk about that. But right now we're more consolidation with a downside skew. Going to the 30, well, let's go to the 1 hour. 1 hour, we do have a naked cross above us. Now we have, but on the 30, the 15, and the 5 minute, we have naked crosses above us and we have naked crosses below us. Right now, we've got a couple naked crosses up in the 2090 and 2092 area on the smaller time frames. We also have naked crosses below us in the 72 down to the 66 level. So just keep an eye. I think we could have a very rotational day today, and until they settle it out, we don't know which way it's possibly going to go. But we do have some naked crosses that are closer to us to the upside that might be taken out first, and then roll over from there. But in terms of trend, again, we're more consolidation, but we are trading below the 9 and the 20 right now on the 1 hour. On the 30 minute, we had this rollover happen on Sunday night. We went up and hit the overnight high at 97.75, rolled over, and then we started a downward trend, which is now being challenged to the upside. And again, we've got a naked cross above us at 94.25. Make sure you write these down. These are targets. A good example of one is here's a naked cross here. We had moved up. What happens? We come down and take it out. You can do your own back testing on this. It's very accurate. Going down to the 15 minute, again, we had this strong move down in the Globex session, and now we've challenged the downward trend and closed above the 9 and the 20. So more consolidation, possible start of an upward trend on the 15. And then again, same thing on the 5. We had this downside trend, and then they started consolidating and challenging it, and now we've got possible slope and separation to the upside, and we're trading above the 9 and the 20. So from the big picture to the little picture, we're more consolidation on the shorter time frame with the possibility of violating some of the downward trends on the longer time frames. So let's take a look at the structure of the market. Well, before we do that, I just want to go and point something out. We were talking about this last night. Don't forget that on Sunday nights, Marvin's doing his radar report. Marvin writes a article for Mr. Topset every week, and basically it's his radar report, what he's looking at for the coming week. One of the things that I watch is the commitment of trader reports. You can see that the commercial paper have gotten more net positive from the prior Tuesday. Remember, these levels are Tuesday levels, and the report is put out on Friday. But the commercial paper has gotten more net positive, where the retail, the small spec, has gotten more net negative, but the large spec have gotten less net negative. So usually when you've got a top in, this retail is left holding the bag, and that's not the case. So right now you have to understand that there's more upside risk than there is downside risk. So just keep that, don't get your bias going yet, because to me, I think we've got two-way trading, we've got rotation, and the risk is still to the upside, even though we're all looking for this rollover and a move down before we start the Santa Claus rally. But that doesn't necessarily mean that's going to be the case. Going to the big picture, the structure, for those that are new, I do my composite and micro composites a little bit different than most people. We've been watching this, and I wrote an article about 3 weeks ago now on rectitudemarket.com about what my macro view was coming into this. And when we broke out of this lower value, this balance area, and started accepting value higher, than gapped up inside of the prior value. This prior value goes from February the 5th through to August the 19th, before we fell out of balance and broke the value area low. We're back inside of that value now. We've got the year open at 2055. We're inside of the value area with the range high being 97.50. That's going to be a very important level for us all week. We've got the value area low down here at 51. I'm using 49.75 as the next key line in the sand. Currently, though, we've got drilled down a little bit deeper, and we're in this distribution zone right here. Now, our VPOC and our microcomposite VPOC from this balance area here was down, at this 78.50, and then it shifted. The composite VPOC shifted from the 78.50 back up to the 84.25, and the microcomposite VPOC shifted from the 84.25 up to 87.50. So we are accepting value higher here. So don't get your shorts on too strongly. The key line for me is if we break this 80.50 today, look for that push down into the 78.50, and then watch to see if we get a composite VPOC shift back down to the 78.50. If that happens, then look for them to push down to the key line in the sand, which I'm using at 74.25, and anything below 74.25, target 70.50, but the big area below is down here at the 66. Our average rotation, and I said I've got a lot to cover. I'm going to try to do it, really quickly. I keep a chart that tracks the average rotation based on the different time frame participants. The orange is the OTF, the black is the pit traders, and the blue is the retail. And right now, our average OTF rotation is right around that 35 area. So if you look that we had this move up, but we only had a 20.25 point move up on the OTF. we haven't completed this leg up yet. We've come down 1075. The average rotation right now for the pit traders is running about 13 to 14, and we haven't made that move down. We will if we get back down to this 84 and a quarter. So right now it's a coin flip whether or not we complete a leg down, and the average rotation, if you take it off of the top here at around 98 and rotate it down the 35 points, that's going to take us down into the 66 area here. But if we rotate off of the pit trader, off of this 84 or even off of this 78.50 and rotate back up, that takes us up from this rotation low on the OTF down at 77.50 up into the 13 level. So we're right in the middle right now. I'm expecting some large rotations Monday and Tuesday and Wednesday of this week as they settle out, whether or not it's going to be a leg down or a continuation of the leg up. Just keep that in mind. So right now we're trading 87. You can see that 87 is the microcomposite VPOC that started from July 1st through to the breakout day, which was the 20th of August. So we're finding some balance around where was the last price that we tried to hold before we fell out of balance on this longer time frame. And then if we can't hold the 87, look for them to work their way down into this 84 and a quarter, very important level, and then possibly push us down to the lower side of that balance, which is right above our gap up day, our breakout candle from what date was that? The 28th. And the 2-day value we found value at 20.80.50, and then we popped up and then went up here, made the new fractal high at 10 and a quarter, and we tried to hold value up here at 97. They couldn't. They came down. We came down. Where did we come down to? That 80.50, rotated it back up, and now we're trying to hold value up here in the 93, 94 area. And since Globex, we've come down off of those levels and we're trading 87. So I would look for a move down into this 84 and a quarter, and then possibly find responsive buyers down here and push us back up. If they don't find responsive buyers at 84 and a quarter, look for them to come down and test this 80.50. And that's a CLVN as well between the double distribution, with the lower distribution being that key number down there at 78.50. And then if we come down here and don't find responsive buyers at the 78.50, then look for them to test the lower side of balance at 74. And anything below 74, I'm looking for a move down into the 66. So looking for a rotational day. So let's take a look at where we are overnight and start moving our numbers over. Our overnight low so far is down at 86. So just where our VPOC was most of the day. Our VPOC spent most of the day on Friday down here at 20.85.50 and then shifted up. They stole the VPOC into the close. Up here at 93.50. So very, very flat. This is a very blunt area, okay? This whole Friday afternoon move created a very blunt area, and why I'm expecting a lot of rotation. Most likely take out the overnight low or put a new overnight low. We still have 20 minutes to go in the Globex. We could go down and put a new overnight low in and expand our low. Our VPOC is not likely to shift today. It's at 87.50. There's that 87.50 number again. We're trading right there. And then our overnight high is all the way up at 97.75. And a couple notable LVNs overnight, that 90.50. I'm going to be using 90.50 as a trade level. It is the right at the open of Friday. It's an LVN in this blunt area, but more importantly, it starts this thin area of the profile above us with the first destination being that 92 area, but really I'd be looking for the VPOC. Let me put this to the back here. I'd be looking at the VPOC and the naked close. We closed at 93.75. Our naked VPOC is 93.50. And our value area high is 94. And 94.50 is going to be my next trade level to the upside. And let's do the upside first because it's easier to do. Based on our current overnight low at 86, our 20-day average true range is running 21.98. So based on the overnight low, our average true range upside target is 21.08 and a quarter. Based on the 21 ATR 21.98, based off our overnight high at 97.75, our ATR to the downside is 75.75. So you can see that we've got a pretty wide range of targets just based on the 20-day average true range. And this leads me to believe that we can still have an opportunity to go in either direction today, and I'm expecting some large rotations off the open. We have no news to really solidify one side or the other. So I'm looking for two-sided traders coming into the RTH session to settle out, who's going to take control. Okay, watch for the OTF in the early minutes of the open. If they don't step in, you're going to have short time frame traders in charge, and we're going to get some rotations in both directions. Above the 94, we've got to be targeting the range high. Now, targets, for those that are not familiar with my trading, trade areas are targets, but they're also areas where I'll enter a trade as well. Targets are just that. They're targets. I won't enter there. I'll be scaling out, or I'll be targeting those, but I won't enter. But trade areas operate as both. So, if we get above the 94, I'll be, either getting into a long or be adding onto my long into that 96 and a quarter, scaling before I get there. And then if we break above it, I may add in an accelerated trade up towards the overnight high. And we got 96%, 97%, I should say, of taking out the overnight high or low. Most likely it's going to be the overnight low. I'm actually expecting a move down to test this 84 area, but let me finish the upside. Above the 97.75, we don't need this anymore, so I can take this down. Let's expand this out. Above the 97.75, we really don't have a lot holding us down. You've got the CLVN here at 99.75. You can use that. I would just use the 2100, and then above 2100, our value area high, okay, for the 1, 2, 3, 4, 5, 6, 7, 8-day balance is up here at the former microcomposite VPOC of 2103. So you've got a strong target above 2100 at 0370, 0350, 03 and a quarter. I'm going to put it at 0350. Remember, that is also the range high from Thursday. And then we had that thin area on Thursday that we never tested. So you can see above this 97.75 value area, it's pretty thin. And I say we get a move to test into the 2100s. I would use 2101.75 as your first scale above 2100. And then above the 03, I'd be looking for some resistance, some responsive sellers stepping in here at the 0550 level. But really, at that point in time, you're going to be looking at the upside ATR target of 2108 and a quarter. And then the next big resistance level above us is the 1350, and then our key line in the sand above. Key line in the sand above simply means that we get above there. I'm looking for trend continuation, and continuation to the upside. And our targets up there are 21, 24.50, 26 and a quarter, and then the all-time high. We should change that to all-time high at the 21.34. Now, let's go do the downside. So far, we've got the overnight low. We're going to be opening up at the VWAP midpoint in that 87, range, right near that former VPOC. Looking for two-sided action. It's pretty, blunt in this area. Look for them to take out the overnight low and then come down and test that 84 and a quarter, the most traded price going all the way back to the beginning of 2013, and the value area low. That will be a key trade area for me today. Above there, I want to stay long. Below there, I want to look for them to come down and test some of these lower levels. The first one is going to be the value area low down here at 82 and a quarter. Just below an HVN at 82.50. If you want to use the 82.50, you can do that. Make sure when you get in, you get funded and scaled before then. That'll be the first possible response, but I really think they'll come down and test this 80.50 level. And then anything below 80.50, our next big target below us is that 78.50 with the range low at 77.50. And then below that, we've got the ATR target at 75.75 and our key line in the sand at 74 and a quarter. Our week open last week was 73. Our week open this week is 92, so they could test that week open at 73, but I would really be targeting this 70.50 area, and that was the micro composite VPOC, okay, right here just before we fell out of balance and came down. And then below the 70.50, it's all about the 66 to 65 level. And below there, a little bit of support coming in at 60.50. And then below there, we've got the year open at 55. Remember, we're back into a positive year. We're in a bullish year. It never happened 7 years in a row since 1887. And below the year, then we get pretty bearish. I'd be looking for them to come down and test this next key line in the sand down here at 49. And then anything below 49, my next big target is the 50% retracement of the significant breakout candle that started this whole run, and that's at 37.75. So below there, below 49, you've got the naked VPOC at 45 and a quarter, 44 and a quarter, 41.50, and then the big target down here at 37. Anything below the 37, look for them to come down to this next big target down here at the 21 level. I don't think we're going to get there today. I think my main hypothesis is a rotational day above 80.50, rotational to the upside, below 80.50, rotational to the downside. Below 70, below 74 and a quarter, looking for it to turn into a trend day and a move down to the 66. Above the 017, I really should bring that down to 2108.50 as far as the key line in the sand, but I don't think we're going to get up there today. I think we're going to get stuck in range and do some repair work here. Taking a look at the Keltner, let me know if we put in another new low overnight. Taking a look at the Keltner with Renko, our Keltner center line is sitting right around that 89.50. Our 24-hour VWAP is at 90 and a quarter. So there's that 90.50 level. Right now, it looks like we've got some downside bias to come down. Our lower Keltner lines here at 83. That tests that 84 and a quarter level, and possibly by the time we get there, all the way down into that 80.50, which is a key level for me today. Above the Keltner center line, a move up to test the upper Keltner is going to take us up into the 95.50 area, and that key level in the 94.95 level. Taking a look at gold, I took a position in gold on Friday. I'm still holding it. My hypothesis was we come down into this value area. Our target was that 91.40 microcomposite VPOC. We tested it lower, tried to break out of value down here at 86.50. I took the long from 86.40. I took a couple swings at it, but I'm still holding a funded contract at 86.40. We're currently trading 89. I'm not liking gold right now this morning. It still looks like it's got some weakness coming in here. Balance, so far for Friday and overnight is down here at 86.90. My stop is at my Theo down at 85.70, and I'm hoping this 86 holds and we rotate back up into the 95 range. And then if we can get above the 1100, then I think I got some breathing room. And I'm looking for a slow grind back up in gold, back towards the most traded price, going all the way back to 2008, which is up here at the 1200 level. But I think we're just going to chop around and come back up and test this 1100. If we get below 74.70, all bets are off on gold, and I think we can come down. And we'll probably come down into test the 1,000 level and this next big target below at 1,190. So that's what I'm looking for in gold. So again, we're trading 87.25. 97% probability taking the overnight high or low out. Look for them to come down and take out this overnight low. If they leave the overnight low alone and get above 90, you've got to be thinking, okay, a move up to take out the overnight high and a test of the 2100s. If they take out the overnight low and break below this 84, look for the bears to get aggressive and take us down into the 80.50, and anything below 80.50, look for them to come down into the 78.50, and any break below 74, then you got to get bearish and think that we've had the rally up. We're going to come down in towards lows for November and beginning of December before we get a possibility of a Santa Claus rally. But remember, risk right now is still to the upside. That's going to be it for me as far as our pre-market trade plan. As always, trade well, trade safe, and we'll catch you on the flip side.